One prediction I'm willing to go on record for 2026 is that the next longevity wave is going to be about women's specific longevity.
The prediction that I'm willing to go on the record for 2026, better movies, better music, better TV, because I just have a deep and abiding belief in artists making great stuff, and that prediction has never been wrong.
One prediction in the space of women's sports is that team valuations will continue to go up and to the right.
Welcome to the LionTree Podcast, the podcast which elevates the people, the relationships, and the communities behind the headlines. In today's episode, we explore how prediction markets are reshaping the way we understand uncertainty, truth, and decision-making. We're excited to release this conversation in partnership with Boardroom, the media brand at the intersection of sports, business, and entertainment. Boardroom founder and CEO Rich Kleiman sits down with Tarek Mansour, founder and CEO of Kalshi, the first CFTC-regulated exchange for trading on future events, and a LionTree portfolio company, for a wide-ranging discussion on who really decides the future.
Thank you very much. And again, thank you, REA, for this incredible experience. Tarek, we did this about 6 months ago when I met with you about investing, and I felt like my education around this sector was so weak that I needed to get to the basics to understand how we got here. And I think a lot of times people are aware of Kalshi and have seen it enter the zeitgeist, but don't truly understand the mechanisms that make it work and how we got here, because it's really entered this zeitgeist in the last 2 years. But this dates back about 6 or 7 years ago. So can you give us a little understanding of when this started, what it was you were trying to solve for, and a bit of the story of how we got here?
Yeah, well, first of all, thanks so much for having me, Arya, and others. So the story of Kalshi, we started in end of 2018, but the sort of idea was formulating for a while before then. So I went to MIT, and my whole thing was just like, I wasn't a very social guy. Like, I was a little bit of a math nerd, and by that I mean like a super big math nerd. I just like always was enamored with like, the objectivity of math. There was just like something beautiful about probabilities and numbers, and it was something that I just like felt more comfortable with. And I went to MIT. Then it was like, okay, where are all the other like anti-social math nerds going? And they were getting hired by finance companies, and I was like, okay, I should go there. And I went, the initial thing was I worked at Goldman in 2016, and there were two things happening that summer that were pretty consequential. So first is Brexit, and the referendum I think was happening in July 2016, and then second was the first time Trump ran for the election. And you're sitting sort of typical Wall Street, you're sitting at Goldman, there's like hundreds of traders, and they're trading a bunch of weird stuff, like swaps and counter options and like all these names that nobody really understands. And but the basic thing was like, you had all these like fancy customers, like hedge funds and mutual funds and high net worth individuals and family offices, and they were just asking like, hey, what is going to happen with Brexit and how should we play it? And then that was the first half of the summer, and then the second half was, what is going to happen with Trump and how should we play that? What is the Trump play? What is the Trump trade? How do we hedge against it? And it really marked me at the time because, what we sold, and we sold this in droves. The big Trump trade that Goldman came up with, it's like super genius trade, was essentially short the S&P on the week of the election. It was a bad trade. Like, I mean, it was a truly, truly terrible trade. I mean, you could not think of a worse trade. The S&P rallied the most ever in its history that week. So it's like, all these guys were right about their prediction. They lost a lot of money. Goldman made money because, we sold it to them, so we're not exposed. But, and I was like, we could build something better. I mean, but the more I thought about it, the more I really got obsessed with the idea because, you have financial markets to price a lot of things, things like stocks, companies, how a company is going to perform. You have financial markets to price tangible commodities like metals and oil, and then intangible commodities. So that really started at the turn of the century, like interest rate swaps and the stuff that really nobody understands. And like really this is about like how about we build something that can price simple questions about the future. Like, will Brexit happen? And have people trade it, buy it and sell it the same way they buy a stock. And it settles, like the way that you get paid out is if it happens, you get $1, and if not, you get $0. And people are buying it at any price in between. So if you're buying it at $50, that means you think there's a 50% chance of that event happening. And I got into sort of this theory around prediction markets, and and there was some theory. So really it started with this economist, Hayek, in 1945, who talked a lot about this idea that information is surprisingly dispersed. It's surprisingly non-central. And we often make decisions in a centralized way. So you have a group of people, like a government or a company, that has very small percentage of the information they need to make a decision, and they make some decision. It's oftentimes an okay decision. But if they could have all that information that could be sitting in Hawaii, or could be sitting in New York, or it could be sitting in Queens, anywhere, they would make better decisions. And the best way to bring that information is via a market, is incentivize people to come and trade and participate, to bring whatever information they have about something. Some people may be following Brexit and they're figuring out how their neighbors are feeling, and they may come and trade it. And some people are, I don't know, Trump fanatics, and they are thinking about how their neighbors might vote, and they might come and trade it. And I really love the idea, because if you could build that market, one, it could be bigger than any of the other markets, because more people will care, right? And you're seeing how much people care about prediction markets now, because you get it, right? It's not very hard. Will it rain tomorrow? How much is going to snow in DC? Will Trump raise tariffs again? Or who's going to win the Super Bowl next week? And the second thing is that it'd be very useful, because if you believe in markets, they're a very good way to aggregate the crowd wisdom to answer a question. And so if we could build this thing, it would make us a little bit smarter about the future. Instead of climate change is real, 100%, everybody else is an idiot, and climate change is a hoax, 100% it's a hoax, everybody else is an idiot, would come somewhere in the middle. Markets tend to not lie. They're not as polarized. They're not as aggressively subjective. And so I didn't start a company then. I just, it was like I didn't really think about being an entrepreneur. I was really gonna go work at Citadel and be a trader. But then the idea wouldn't leave me. It was just I just realized after a year or two, it's if I don't start it, I'm just gonna regret it for the rest of my life. And then so we decided to start, and that's when the whole journey started.
And you made the concerted effort to focus on regulation from the beginning, right? So the climb from 2018 till now, when everyone is familiar with the market and familiar with the brand Kalshi, was very thought out. What did you have to do to start to put that in motion? And then how did some of those ambitions evolve as you started to work on regulation?
When we first started the company, we were like, okay, well, why does this not exist? It seems too obvious, right? I mean, we can't possibly be the first that came up with the idea. And it was true. We weren't the first. A lot of people have come up with the idea before. But it was just not allowed in the US. It was and so, we just decided, we're like, okay, well, if we're going to do this and leave everything and go for it, we are going to have to do it by the book, regulatory first, and we're going to have to legalize the space, which is a little bit of a dumb thing to think about at the time, because but we were a bit naive, and it helps to be naive. You just don't realize what it was going to take to actually make this happen. But we were just so deeply committed because, one, we just never thought we could get to proper scale if it wasn't done within the right framework. People wouldn't trust it. It wouldn't go mainstream. And if it did, at some point, regulators would shut it down. And two is a bit more philosophical. I always thought, I was okay, what are the companies that I look up to? And there are companies like Schwab and the new generation like Robinhood, Coinbase. And it was pretty tough because, we started, we're okay, we're going to get it regulated first. And imagine two 22-year-olds starting calling lawyers that, whoever would pick up the phone. I mean, in one day we called literally 65 lawyers, and all of them said no. Until we found this one weird guy like Jeff Bandman. But he said, yeah, I mean, I know I was a regulator at the what we thought would be the right regulator, which is, it's called the CFTC. So the SEC regulates equities, this regulates everything else. And let's just try it out. And, imagine the first time walk into this, financial regulator and they just look at us it sounded like a joke. But you keep banging your head against the wall, and then 4 years later, I mean, this took 4 years. Yeah. So we were so deeply committed, we're not going to launch, we don't care. We had competitors that launched and did stuff, but until we made it legal. And then we did actually make it legal. And after that, I think the company really sort of skyrocketed.
And unlike Polymarket, which is unregulated, You guys went through the exercise of getting regulated first. Throughout that process, how did that redefine what the definition of scaling was and how you were going to approach that?
I think in some ways it just gave us the right to just go really big. Because I always thought about it, and the more I think about what we're really doing at Kalshi, like we're really expanding the universe of financial market to things of relevance that the average person can understand and participate in or care about. And we could see it, like, you know, we were sort of not there for a while, and then when we did actually manage to get regulated and launch and, you know, appeal to institutions, appeal to the large distribution like brokers and others, you know, you can think of this as this is the next generation New York Stock Exchange, because it is, and it's starting to feel like it. It trades like it. You know, the participation, at least from individuals, is much broader and bigger. It's like we had to do it clean and regulated because otherwise people wouldn't trust it.
So give us an idea of the scale of the business today and what type of market share Kalshi has. Because I think a lot of people hear about Polymarket and Kalshi, but when we were talking outside, it was surprising for me to hear who's actually second in market share.
So Ari is a smart investor, is the way I'd put it. But I think we're basically, like right now we're like $100 billion in transactions a year. And it's growing something like 50% month over month. The more important thing is the market is growing at such a pace that, like, you know, we don't even think much about competition. We just think about, like, okay, how do we keep growing this market? And we just have to stay market leader. And you're seeing a lot of companies, whether it's financial brokers like Robin and Schwab, get in, or work on some stuff on that front. There's like a shift in consumer behavior. I think we've always focused on like just the robust fundamentals. I really think, like, people see Kalshi and hear about Kalshi. It's been a year and a half, but like I always say this, like, this is overnight success, 8 years in the making. Like, there's like 6 years of foundation building that we've always focused on. And the thing I like about the company is nothing's really changed in those, from how we operate in those years to today. It's kind of like we were traders, so we focus on the output, not the outcome. Like, the outcome you can't control. Like, you know, sometimes you get to the World Cup final and you get to penalties and you win, and sometimes you lose. And Messi now is the greatest of all time because he won. But if that penalty went out, he would have lost. And you can't control the variance, but you have to just make sure that you're consistently putting out output, and that's how we think about it as a company.
So you say nothing's changed, but from a founder's standpoint, as you've scaled, what have you kind of learned about what your responsibility is and what the impact that this business can have on society?
I'm still figuring out, like, me as a founder and CEO, that's an interesting question, because, like, when the business scales this fast, it's like really, the difficult thing about it is, like, you basically have to change yourself every like 3 to 4 weeks, right? Like, by the time you start feeling like, okay, you got a handle of like this next phase, you're now already like, oh shit, like, you know, this is not fitting anymore. So that's difficult. And I mean, my general answers to this is like, just work as hard as humanly possible and like deliver as much as you can, and generally stay true to your principles. This year we're battling a lot with sort of, once we're getting a lot of visibility. So like, people talk a lot about the company, and there's a lot of skeptics and there's a lot of supporters, and you have to start thinking very critically about like, okay, what is the role that we want to play and how we want to, you know, present ourselves. But I think it just goes back to the vision. Like, I think at the end of the day, long-term success, putting aside commercial success here, is I think there's a very big opportunity to redefine the way that people ingest news and think about the future. Like, we can sort of really depolarize and objectify, make the whole process more objective, where people, you know, they're not necessarily listening to pundits. I mean, already we've seen this sort of trend of people don't really trust authority figures anymore. Polls have, like, people generally like are skeptical of polls, increasingly so. And I think that's opening up room for an alternative. And I think prediction markets are the antidote. And I think the beauty here is, like, at the time, people would think maybe social media was going to be the antidote, but the issue with social media is, like, in some ways it incentivizes clickbait. Whereas prediction markets, the way that we make money at the core is we incentivize truth. Like, the more liquidity, the more participation we get, the more accurate these markets get. So my incentive is actually, how do we make these more and more effective, which means more and more truthful. And I think if we deliver on that, I think this would be a very, very valuable and useful thing for society.
Can you actually explain the nuance on how you guys actually make money different from some of the competition?
Which competition?
Polymarket.
Well, they don't make money.
Because you don't take fees. Well, there's your difference.
Yeah, I mean, like there's traditional, like, you know, the one thing that we get associated oftentimes, or there's some of the skeptics maybe call prediction markets another form of betting. And, you know, I always thought, and there's a lot of history about that. And it's interesting because, you know, when I first sort of started digging into this and I was like, okay, why does this not exist? And the reason I got excited about maybe we can make it happen is because the journey of all the traditional financial markets was very similar. And there's a lot of parallels. So at the end of the 19th century, there was actually a Supreme Court decision or like a big sort of legal battle between the states and the federal government about whether grain futures or commodity futures should be regulated or considered to be gambling versus a financial instrument. And the critics were saying, well, it should be gambling because some people are speculating. You know, the age-old, you know, is financial market, stock market, is it speculation, and so on. And the Supreme Court in 1905 decided that actually, yes, some people are speculating, which you could think of as a bet, but the pricing that comes out of these markets or the hedging ability for the farmers was very useful, so that's a financial market. So we're going to keep it in the financial market bucket. And I think Kalshi has sort of brought back that debate over the last sort of, you know, half a decade. And I think that it goes back to, like, one, is there economic and social relevance to the thing outside of just rolling a dice and betting on it? And I think the answer is unequivocally yes here. And then two, I think the mechanic. Like, I think the beauty and the reason why prediction markets are growing so fast is there's no house. You're not going and betting against the house where the house's revenue, the way they make money is your losses. Like, in a company where the revenue is equal to your losses is going to have a different set of incentives than a company where people are trading against each other, you know? Rich is trading against Arya is trading against Rich, and I take a transaction fee on top. And my incentive is like keeping you trading and more engaged and more interested, making sure you understand what you're doing. I don't care who wins, loses. I'm neutral. And so it enables me to be more transparent and more fair. When Uber showed up, the taxis weren't saying like, hey, we're being disrupted by Uber. They were saying Ubers are not safe. That's usually the argument. And the same thing happened with Airbnb. And, you know, you would take one example of one weird host and, you know, blow up and it's the same thing. It's the age-old sort of story of, like, there is entrenched interests that are at least perceiving. I don't actually believe necessarily that, like, this is going to be a net lose for anybody. I think everybody's going to be a net winner. But there's some degree of disruption. And then when there's those types of dynamics, like, you know, I mean, Jeremy, you dealt with it a lot in your business too. Like, the entrenched incumbents are going to sort of come out and say all sorts of things. I mean, they could, you know, and they generally make up data. I mean, also anything, you know. I mean, and the truth is, like, that's not, I mean, we're a company that spent 4 years getting regulated up front. We actually are more regulated and have more protections around customer protection, market integrity than really any of these businesses. And if anything, like, our incentives as a business are healthier, right? Because we just discussed, like, you know, the reason you have these issues around customer protection and problem gambling is because you've kind of created them, right? Like, if you make money via your customers' losses, what are you going to do? You're going to promote more losses, right? And then you're going to have to navigate around the edges about how to mitigate those losses. We don't have that intrinsic incentive. And yes, there's risks with any financial markets, right? There's excessive risk-taking in stock market. There's excessive risk-taking in traditional betting markets. And there is in prediction markets. And, you know, it's all about having the right set of safeguards. You have to take it seriously. You have to make sure if anybody's doing too much, you know, they have the tools to basically block themselves, or you can block them yourself. And we have all of these things.
Yeah. Well, I would imagine that those same sportsbooks will still take $1.5 billion, if not more.
Yeah.
So is the truth that the profile of this consumer is different as well? Because all of these gambling companies are launching prediction markets. Do you not see that as any bit of a challenge to that sector of the wagers on your market?
I think competition is generally pretty much always consistently a good thing for a marketplace. I think an industry doesn't become an industry by one player. It has to have competition. It has to have a healthy degree of competition. I think it's just so early. Like, it's a bit like, you know, AI still right now. Like, you know, how much cannibalization is coming from Anthropic versus OpenAI? And they're all still growing, right? And we saw it in crypto for a while. So I think now it's all about, like, growing the market and growing the pie and educating people at what this is. And so we actually want more competition. No, I think they'll do more than they did last year, and we'll do more than we did last year. And I think everybody's a net winner.
How do you guys decide which markets exist and which shouldn't?
So half of the market come from our team. So we have a team that basically is figuring out at all times what is trending, what is top of people's minds. And the second half is our customers suggest things. And then there's a whole setup, and this is actually pretty hard. Like, it has to go through a whole pipeline of how do these become like legal financial markets. Because each one of these is a market. It's a bit like a stock. It has its own ticker, it's reported, all of that. And there's challenges with that. The two key challenges, one is how do you define what actually happened? And one of the most complicated markets we've ever had to define, surprisingly actually, was the election. And most people don't know, the election is not final on election day. I guess most people know that, but most people don't know that election is not final after Congress certifies the election. So that actually is not when you know who's going to be the next president. The only way to know who's going to be the next president is for that president to be sworn in on Inauguration Day. And all these details you have to deal with, because you cannot have uncertainty in markets. And so that's a whole kind of piece of it. And then there's sort of what we don't do. So it's illegal to do war, terrorism, assassination, violence. But also any markets that, and you may have heard these, but these are usually done on unregulated markets. They're not done on regulated markets in the US. But we generally think very hard about making sure markets no one can profit from a bad thing happening. There's categories of markets that maybe are not strictly illegal but could still be bad, like wildfires. Yes, it would be good to know if there's going to be a wildfire, but you could incentivize someone doing something bad.
Yeah.
So we don't do these types of markets. And it's hard. The first time we listed markets, it took us 18 months. Now we can do it in 24 hours. So it's just day over day we improved.
Are there markets that have surprised you guys as a team that's kind of defined a bit of what the collective behavior of a consumer is?
So I'll answer it in two ways. So there's a set of markets that, for example, prediction markets got wrong. Or maybe not wrong. They didn't really get it wrong. I'll explain why it's not exactly wrong. But the Pope was one that, the American Pope, the prediction markets were pricing the Pope at 1%. So nobody thought that the American guy was going to win. And that was an example where, these markets operate best when there's a lot of information that's scattered around. The Pope election, they actually quite literally just, put themselves in a room and fight it out, and no one knows anything on the outside. So you cannot know, there's no information to trade on. So, and this is what happened. They went in and they fought it out, and they somehow decided on the American dude. So and markets could not. There's no information. So markets are not a crystal ball, right? It's not all of a sudden we just create a crystal ball that is going to pull off miracles. What markets do is that they aggregate information in real time. They are a very good incentive to bring out information that anybody in this room might have, and they do it in real time. They do it fast. And so if there's no information, then markets can't come up with magic.
Why do you think people are increasingly trusting of these markets over quote unquote experts or pundits or polls?
I think the primary reason is and I always go back to this, is over long term, the thing that wins is the better product. And it is a better product. It works better, right? So if you look at how the prediction markets have perform against the polls, they perform better. If you look at how the Kalshi markets perform against, for example, even things like inflation, right? Inflation historically, Wall Street has a print. They have the Bloomberg Economist survey, and then there's some of the swaps that you can backtrack, what is going to happen next month. Kalshi is doing better. Kalshi is even doing better on Fed interest rates, what the Fed decision is going to be. And then we're seeing this on things even like weather or even earthquakes. We're not super accurate on earthquakes, but we're less wrong than anybody else. And over time, if something is working better than the alternative, then people will trust it more, right? And in some ways, unfortunately, the alternatives are not very good, right? Pundits on TV are saying all sorts of things that are, self-interested very often. Social media is not really helping. Your feed may be very different from mine, and we may have two totally different views of the world. I think there's a little bit of elegance in the idea that markets don't lie. When people have money on the line, when they have their money where their mouth is, they tend to be a little bit more truthful.
And what about institutions and organizations? How have they started to use markets? And are some of them actually investing in the markets as well?
Yeah, I think that there's sort of a two-step thing. One, a lot of institutions are using the data, right? If you're a hedge fund, or if you're really any decision maker, using superior data is going to be part of your strategy. And we see actually a lot of hedge funds basically pull our data programmatically, and they feed our data into their algorithm or their decision-making process around, portfolio allocation. But what we're also starting to see traction in is like more participation, which is maybe like the full circle back to Goldman. Like that trade, instead of now going to Goldman and putting that Trump trade with Goldman, which may or may not be good, you can now just put it directly on prediction markets, which is much more clean and much more direct. And I think 2026, I think we're going to see a lot more of that. I think the banks are leaning in. We see a lot of hedge fund adoption. And I'm very, very excited about that.
And where have you seen that these markets are the most powerful? And where, to that point, do you see it that they still fall short of it?
I think when there's a lot of information that's basically fragmented and disparate. And then also in places where there's just no alternative. Like, you know, my favorite market for a while was basically whether TikTok was going to be banned. Because you could not ask a single person about what was going to happen. It was something that was really dynamic, and like changing the administration was going to impact it, and then there was so much politics behind it, and it was important. Like, you know, like that was a very critical decision for the U.S. Like there was millions of people whose livelihood depends on TikTok, and there was very serious national security concerns with the company, and so I think this is where prediction markets really shine, because like there's really no good alternative to getting informed. Like how are you gonna go? How are you gonna know this? And so yeah, it's usually things that there's no alternative to.
And people's concerns around insider trading on certain things, when a company will go IPO, things that could be accessible.
Yeah.
How have you guys combated that from a storytelling and narrative standpoint?
Yeah, I think this is the part where it's important to like distinguish. And you know, with nascent industries, often like people look at them as a monolith. It's like, well, there's prediction markets, or there's crypto. But like the reality is like these industries, there's a lot of bifurcations, and in ours, like there is a regulated aspect of the industry and there's an unregulated offshore aspect of the industry. So the regulated part, like Kalshi and others, like Robinhood and Coinbase and others, like we ban insider trading, and the ban is very similar. The rules are very similar to the stock market, and the way that we enforce those rules is also very similar. And you'd be surprised, like it's actually not very hard to catch fraud if you're pretty serious about it. Like we had to spend years on like building the systems and building the whole investigation function and all of that. And if you do insider trading on Kalshi, it is a financial crime. It's like doing insider trading on a stock. But the most interesting thing is like when people commit fraud, they don't do it for $50, right? Like they just do it for more. They do something weird, always, like, you know?
Yeah.
And you can catch that. And if you catch that, you deter, like you levy heavy punishment, and that acts as a deterrent for the next person. But that's a very important thing. Like, you know, there's this debate about should insider trading be allowed in prediction markets, and my answer is unequivocally no, for the same reason as why insider trading shouldn't be allowed in the stock market. Because if people believe the game is rigged, they won't participate. Like, why would you? But yeah, we take that very seriously.
And where have you seen bias show up? Either like human bias or algorithmic bias?
It's usually right after news. Like when something hits, it's a bit like markets. I mean, they function exactly like financial markets. Like, you know, when like some piece of news drops, you see this with stocks all the time. Like the stock starts doing weird things. It doesn't really know what it wants to do with itself. And then it stabilizes. So usually that's the place where we see the most like overreaction to some piece of news, or maybe the market didn't really understand what this piece of news is. But that's the place where there's usually the most bias. It's also the place where the most amount of money gets made, because people that are very careful about that, you know, the people that do arbitrage, or people that are, you know, sitting there really thinking about like, okay, well, is the market pricing this accurately? They basically price it back down.
Yeah.
But the amazing thing is, like, you know, we saw this in the 24 election. It was like really interesting because, you know, how each side believes in prediction markets as long as their odds are up, and like they think the market is not working when their odds are down. And we saw this, like, you know, when Trump's odds were up, all of a sudden I was like a Mossad agent that's like, you know, figuring out how to make Trump win. And when Harris's odds were up, I was like an Egyptian billionaire. So like the range, and I mean like, you know, Lebanese, Christian, none of, you know, but I mean, I'm happy to be either, but like, you know, but the point is, like, the markets were working at every point in time, because if there is bias, the beauty of markets is there's now an incentive to correct the bias, right? Like if the true value is 50 cents and someone is selling it to you at 40 cents, well, you should buy it. You should buy as much as you can from it, because you're going to make 10 cents for free. And that's why they work so well. It's like, you know, as long as anytime someone tries to bias it, or intentionally or unintentionally, there's a lot of incentive to bring it back.
Do you think there's boundaries or guardrails on where markets should not play a role, though?
Yeah, I think we talked about like a lot of the places where, I think there's like the places where it could create a bad incentive. I think that we should avoid. And that's true for traditional markets too. Then there's like an area where like I've always thought about, and this is a little bit more difficult. I think this is more of a broader question that we should discuss. Like one of the big ones for example, we didn't do the market on Roe v. Wade at the time. That's a Supreme Court decision, and we were a little bit like we were just getting started at the time, so we just thought it was like a bit too touchy. I think that was the wrong decision. I think we should have done it. Like I think people would have been less surprised either way if we had that market, and less surprised, less of a shock to the system is always a better thing. Like being more informed ahead of time is better than being less informed. So there are these questions, and I think it's over time I can see different companies taking different views to that.
So as you guys continue to grow, how do you distinguish like a cultural success or failure separate from commercial success or failure? For you as a company, for you as a founder?
Well, I think that the cultural success is like when you were starting to see a lot of this is when prediction markets are just embedded in the fabric of news and culture and society. Like when people are naturally and organically using prediction markets when they're thinking about the future. Like the example I always thought about is like, when you have this sort of annoying uncle at Thanksgiving saying like crazy things, I want everyone to pull up Kalshi and show them like actually like here are the odds. Like either you're actually sure about what you're saying, you should put money on the line, or you're just full of shit, right? And I think society would be better off if you do that, right? Like, I mean, any of us can name like probably 10 Twitter personalities right now that you thought about, like, yeah, I wish this person actually, you should tweet at them. Just be like, do you have a position? If not, you should stop tweeting. But I think this would be success. This would be cultural success long term.
And you guys as a company, how do you think you guys can contribute to society as a whole beyond just the company itself?
I think it's just more truth. Like I think it is at the fundamental level. Like I think if we bring more objectivity and more truth to how we think about the future, I think people will make better decisions. They'll allocate resources better, and they'll manage risks better over time.
Yeah.
Right. And we're seeing a bunch of facets of government and companies that are pulling our data and using it when we're informing policy. Like we don't need to guess where inflation is going to go. Like we can actually predict it. We can have the market predict it. We don't need to guess what the impact of tariffs is going to be by testing it. We can ask the market and get an answer, get an objective, clean answer. And that's a good thing, right? Like for either side. And so I think long term, I think that's what I see. I think we can make better decisions if these markets really work.
What does Kalshi say about its football?
68% chance for Seattle. I disappointed half the audience right now, but yeah.
What's funny though? That's taking the consensus of what people think, and most people lose when it comes to sports gambling.
Not on Kalshi, 50-50 on Kalshi.
All right.
There's no house,
Yeah.
The house doesn't always win here.
All right, well, Tarek, I said this after we had our first call months ago. You truly are these, they come around every so often. You are a innovative and transcendent founder, and I'm sure we will all be seeing and hear from you tons in the future. You built an incredible company, and you're starting to change the world. So I appreciate it. Thank you so much. Thank you, guys. This is the last of the evening.
Thanks so much for having me. Thanks, everyone.
Thank you for listening today. The LionTree Podcast is produced by LionTree, the independent investment and merchant bank for creativity, community, and capital. For more information, visit liontree.com.